The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 29th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Would love to hear your voice. Of course, if you can't dial in, let your fingers do the walking. We've got you covered. Just send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, inside the Tigers Den well, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading out 75 points, 26,541 is the print. S&P's off 6, NASDAQ 100 down 6, Russell only down 2.5 points. Semis are off 5. You've got the trannies up 43 points. Spot volatility index is up 14.5%. It's trading up $1.62. So that's going to be something important for you and I to look at. You've got gold trading back $12, silver down 31 cents. We'll go see what those are trading into. Levels to be looking at. Light sweet crude down 64 cents. Leading the charge here to the upside, you've got Amazon up $25, $14.27 is what she's printing out at. You've got Netflix up 10, Regeneron Pharmaceuticals up 8, Capstone Paper up 8, Mercado Libre up 8. To the downside is Priceline dollar-wise. No, I take that back. It is VMware. Dollar-wise, leading the charge to the downside, off $14. Wynn Resorts up $13. Volume behind that move, 17 million shares. Priceline down to about 12. Silicon Limited down 10. So plenty to look at. Of course, I want to look at what you want to look at, and we'll get to some of the requests, a couple from Friday. One from this morning. But first, let's just go take a look at the markets and see what it is that we see what we're going to go ahead and pay attention to out here. Let's start with the Dow. And we'll start with the Dow Equity Futures contract is really what I meant to say out here. And if we take a look at the push down thus far, what you're going to see is it pushed right down into support, also known as the old AKA Stevie's red line. Now, that red line data level out here, and you can see how well it acts, how well price responds to it. If you were to see it close below that level, by the way, 26,437, at this stage of the game, what you know is support was tested and held. If you want to learn more about that, I've got a workshop coming up for subscribers on Wednesday. You can sign up for that. All the details on the homepage at TFNN.com. And all of those users of the Thinkorswim platform get the access to Stevie's red line on their system for free. So that is a double bonus out there. So what we know about the Dow, move down into support itself. 26,437 is the number you'll be watching throughout the day. If I look at a 30-minute chart, so we're going to go from the daily to the 30-minute time frame. Let's just do a little bit of wave counting here. Let me make sure I start to the downside from the right spot. There we go. So from the down, so only in wave number 5. Now, what you can see here on a 30-minute basis is price is likely to get up and test this 26,531 level. Because what price did since the high out here, little doji candle it formed, was the actual high at about 2,100 hours. When was that? That was 2,100 hours on January 28th out here. So just a gradual move lower. No A to B equals CD pattern that is completed, so nothing that we can draw in there. No bullish reversal signal. Price came down and tested that red dashed line. That happens to be a Tommy DeMark support level. So that area, and that's around the 26. 490-ish range out here. So we're going to, and you can see the price oscillator is below zero. So we're waiting to see what this test unfolds here. This test being price in Stevie's red line, right around the 26,532 area. If you see a test and rejection, boy, was that tough to get out. Not too tough, but if you see a test and rejection, price gets up there, starts to back off, well, then Stevie's red line on the daily chart becomes the target again for the day. If price closes above this, then that says, okay, price can continue moving higher, especially if that price oscillator, that bottom panel got up above zero. If we take a look at the ES Mini, now in the ES Mini, it did not get down to Stevie's red line. It got close, but it was no cigar Rooney. 2850 is the number, probably 28.51 in a few minutes out there. We're trading at 28.66. It was close, but still no cigar. We take a look at the ES Mini. If we and so in keeping with the ES Mini thought out here, one of the other things that we want to pay attention to, and we'll switch over to a 60-minute chart, is we can see that we've had a bearish crossover on the 60-minute time frame. That's taking a look at the TAS market profiles. And the TAS market profiles, this is showing us that there are more issues on a 60-minute time frame trading below the bottom of the box versus trading above the box. That's 209 versus 163. But what I do here is I go take a look at the 60-minute chart for the ES Mini and try to get the message from it. What is it doing at this stage? And at this stage, this says to me more just counter trend rally. So if we take a look at market breadth, we've got a negative crossover. If we take a look at what price is doing right now, we can see it's gotten back inside its profile level. And this would suggest your 28.66, no reason for it to not trade up another 3 to 4 points. Test Stevie's red line. See how price responds when that unfolds. By the way, inside the NDX 100 for the same time frame out here, let's pull this over. Let's see where it is at. We haven't taken a look at the NQ, but here is what we know. Right now, as we're on the air, is the tug of war between the bulls and the bears. You have, in essence, 37 issues trading above the top of the box and 32 below. So a slight edge to the bulls out here. But you can see over the course of the last, since 10 a.m., so the last, 10, 11, 12, 3 hours out here. You like that math? I was actually going to use the digits on my hand to count there. We can see this little tug of war out here. Is there anything that gives us a clue as to what the NASDAQ wants to do? This market's not going to go south without it. If I look at a 30-minute time frame, it's quite bullish. All right, this is tying right into what we looked at as market breadth. Why would it be quite bullish? Hey, you had a retracement. Price comes down, test Stevie's red dash line. That's actually Tommy DeMark's support line out here. Price coming down just towards the zero line of the price oscillator, and now we're up above it. As long as price holds 70.13, no reason for the NQ not to make a run back for its highs. This is Steve Rhodes with TFNN. When we get back from this break, we're going to go take a look at, I think the requests were for the GDX. It were for a couple other things. The SQ, YINN, and VNO. Let's have some VNO. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly, I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to our first caller, Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you doing today?
Great, Steve. I was looking at MYGN. I was looking to get long calls over the next couple of weeks. I just wonder where would you catch support?
So that's a great question. And in order to really take a look at that, I'd go back, because you're just looking at a short-term trade here, to the daily time frame. And what we don't like about the daily time frame right now is the fact that it gapped down this morning and is trading below Stevie's red line. That says that there's more to come to the downside. So today is not the day. And if I go back to the daily chart out here, Ron, the volume behind this move, let's just take a look at it. So far, about 1.1 million shares out here. This thing made a high with 935,000. So it's kind of barreling down, so to speak. So where my eye goes on this is really to the swing point from January 9th. The low is 33.41. The high is 34.80. The top of the daily box out here is 34.05. So it's 34.05 to 34.80 would be the price area I would be looking at. But if price is to move down there, it's going to be really important for you to be taking a look at volume. And what you'd like to see is volume of less than 700,000 shares as it's approaching that 34.80 level out there. If it's coming in with more volume than that, then you've got to kind of stay put out here inside of Myriad Genetics. So that's what I see right now. There is a level of support that's held this morning, and that level on a weekly time frame. So if you're going to ask me the intermediate term type time frame question, I would say as long as this holds 37.30, that's the top of a weekly box, and it closed over the last 2 weeks, and the structure of that box was bearish. So as long as 37.80 holds, then okay. Now, would you add to a position? No, but I wouldn't exit from an intermediate term time frame position either. So those are really my parameters. I think for you and your trading, it would be best to just focus on the daily numbers that we looked at.
Okay, great. Thank you very, very much. Appreciate it.
You bet. Thanks so much for calling. That was Ron in Denver, and that was taking a look at MYGN Myriad Genetics. Now, we had some requests out here. Let's go. I got to go back to see. I wrote those down. One was to take a look at SQ. This is from Friday. We just didn't get a chance to get to it. And if we take a look at SQ out here, I put down AQ. That's not going to work real well. Let's put down the correct symbol. This is square. And as we look at Square, you know, this set of charts out here has our daily, weekly, monthly profiles out here. And so we always look to see, is price traveling within the box, above the box, below the box? And we don't have a monthly profile because simply we don't have enough trading data. This is an issue that came out in 2015, December 2015. But we do have daily, we do have weekly, and prices above both as we speak. Actually, the daily is pretty much sitting right on it at 45.82 out here. So everything continues to be short-term bullish. This has a large supply line, so to speak. And what we mean by that is, as the week of November 20th, when this thing made a high, 49.56, the very next week there was a lot of selling. In fact, the most selling on a weekly basis that we have seen inside this equity. It's not a high out there, right? The high was the week before, so it's not a high volume high that says, okay, something goes back and gets tested. Instead, it was a bunch of sellers out there. So the buyers are somewhat squeamish about this equity. A close about 47.40, and the squeamishness simply goes away, and you're at 45.80. So this is just an area here where you've got, you know, you have to fasten your seat belts because of the agitation. Price is likely headed to 47.40. If you're long this issue, you really want to see this close above 48.11. And that is the low of November 24th. The downdraft started that following day, November 27th. So that's my take as we take a look at Square. We also had a request to go take a look at YINN. So let's go move in on that. That is the Direction Daily FTSE China Bull out here. And it's always a problem for Stevie to really evaluate this because I don't know exactly what the holdings are, you know, the exact indice that you and I can go to. But I'll give you my best call out here, and that is that this is likely going to trade down to 45.48. This is just simply based on this data. Now, you might say, how the heck did you say that, Steve? Well, you just said you struggled to provide us with information on something where you don't know exactly the indice that this is based upon. Well, the only data that I can go from out here when I take a look at YINN, and I'm going to put it on my other chart too, because is the mere fact that today is trading back inside a daily profile that formed on Friday. That was a bearish structured profile. On Friday, we would have said this looks awfully bullish because as long as it stays above 52.03, that is bullish. Well, it's back down below, and it is a bearish structured box. That gives me the target being the bottom of the box, 45.48. Will it get down there? I don't know. It likely will get down to Stevie's red line. That much is for sure, and that's about the 49.65 level. So that is on YINN. There was one other request. I just want to cover this because we are thorough, and that was for the VNO. VNO is the ticker symbol. That is the Vornado or Vornado Realty Trust out here. And the question is, I don't recall what the question was, but if we take a look at this, it's going to be the daily time frame where we're trying to get the next piece of information from. And the reason is that it's trading into the most recent swing point at the lows back on January 18th. There were 1.37 million shares traded. You're pulling back into it with lighter volume. You're pulling back into a bullish structured daily profile. See how the center line is closer to the bottom, 71.27, closer to 70.84. The low today, 70.83. So this may be rejecting. I believe the inquiry out here is trying to go long this. So do you go long this? First, you'd want to make sure that this cleared and closed above 71.53. So I would say, no, I wouldn't. And the reason no, I wouldn't yet is because the weekly, and you're looking for a longer-term time frame chart out here, the weekly is trading below the bottom of its profile box, 72.74. Now, the weekly was trading back into, this is last week, this is today, this is the week before, the swing point from October 31st, 6.7 million shares. that are there. And you came down 4.6, 5.2, 4.7. So it is coming in light, but says you've got to let it test the bottom of that level, and that's 69.78. So I would say just stay put versus being kaput. And that is on ticker symbol VNO. We've got a request from Danny in Atlanta, hot Atlanta in the den. And the question is, how high can Amazon go? I'll just say, I don't know, 5,000 as a number, just throwing it out. But that's not really what the question was. The question was, could you be more specific? And if I try to be more specific out here, the next target on a monthly basis is 1553 in its confirmed monthly A to B equals CD out there. So, Danny, I say it can go up to 1553. That doesn't mean that answers the question, though. How high can it go? Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So just back to Amazon. They report on earnings February 1st. I'm going to guess after the bell out here. And when we take a look at the 3 time frame charts, we look for market profiles. The highest profile level comes from the daily chart out here, and that's at 1326.95. So a disappoint on those earnings would that would be an area that you would look at support. Now, the average daily range on Amazon these days is $27, $26.98 to be exact right now. So you could take $26.98 times 1.618. Quite frankly, that would be your trading range, but this thing could move in either direction out there. And then lastly, if I do try to look, if I look at Amazon from just simply a wave count formation, you're only in the second wave on a weekly time frame out here, and the monthly, although I'm not showing it, that thing recycled its seventh wave a month or two ago. So everything looks very strong. On the weekly chart, 1297 would be the level of support. That is Stevie's red line out there. So everything looks good. Everything looks pretty good. Everything doesn't look pretty good. Everything looks gosh darn great right now when you take a look at Amazon. All right, we had a request. This comes from Larry C. Let me see what Larry C. was kind enough to write at about 12:20 this afternoon, wondering if you could go over GLD and GDX in today's show, including where your red line and the TAS Daily Weekly support lines are on both of these charts. If you have time, please include GBTC and its TAS support levels and so on. So let's go take a look at GDX first. That's probably on the minds of many out here. So let's go take a look at that GDX, and let's start by moving over and taking a look at the 3 time frame profiles for a GDX. That is the VanEck Gold Miners ETF out here. You're going to see that prices come down on a daily basis into the top of its box. So 2373 is the top of its daily box. The top of the weekly box is 2377. So prices come down into a level of support thus far today, just simply using market profiles. What happens if price closes below those little puppies? So we'll use 2373, would suggest to run lower. On the daily, I would use the price target of 2312. It's very close to the center of the weekly box at 2305. So simply from a market profile standpoint, that's what I would be looking at. As far as Stevie's red line, well, that was crossed earlier this morning, basically right from the get-go. The GDX gapped to the downside from where it had traded on Friday, and it is continuing to trade below Stevie's red line. That number is 2410. As long as price stays below that, this could just be a small trading range, 2410 down to the 2373 mark out there, but it's really going to be 2373. You're going to want to watch for the downside aspect of the GDX out there. With regard to the GLD, Larry, my preference is not to go take a look at that chart, but instead, because we know the underlying instrument is the gold contract, it is to look at that. So let's go and switch and do that. And from a long-term, from the standing of taking a look at their 60 to 40 daily and weekly profiles out here, here's really what we know. We know that gold on a weekly basis tested and rejected its swing point area at the 1371 level and didn't like it, made its move of a move. Oftentimes you make a move of a move, meaning you get back to that swing point, you do something different. Hopefully you blow through it. It did not blow through those doors. So what we can conclude here is that gold was unable to make it above a resistance zone. Well, voila, you wake up Sunday night, you start trading gold, and soon enough you get a brand new market profile that forms. That market profile, the top of that box was 1354. As long as price stays below that, then 1333 to 1337 become the price target. Now, the good news for you out there is this is a bullish structured box. 1337 is the center. 1333 is the bottom. Price should hold that level. Should is the key word. If price doesn't hold that level, that's a bad sign here for gold, because we haven't seen price trade below the bottom of a daily profile ever since it made those lows back in December out here. So that would be a bad thing. So the number to be watching is going to be 1333. That's the one I have my eyes on. Gold is trading below Stevie's red line. Right now, that's at 1346.60. So that says, okay, you can go ahead and pull back further. Well, you and I have just identified the area to be paying attention to. And again, that is 1333 to 1337. We could give it just a tad more bit of room. We can use the top of that weekly profile, 1326.90. That is the line of demarcation. Is it possible for gold to move down to that level? Well, the answer there lies in what in the Sam heck is the U.S. dollar index doing. So if we go take a look at it, here's what you and I are going to find out. We're going to find out that it, in fact, did make that seventh wave move. Letter G. That was confirmed on Friday. This is an A to B equals CD to the downside. If you want me to draw that in, it would look like this. So now you've got your A to B, about a 1 to 2, A to B equals CD. As we speak right now, at 1:36 in the afternoon, you have a confirmed bullish reversal candle. You, in essence, have a confirmed buy the D point. Now, that is not what you want to hear if you're holding on to long positions in gold or the mining equities out there, or silver for that matter. But you and I have one more threshold that the U.S. dollar index has to get above, trade above, stay above to prove the point. And that level is going to be Stevie's red line, currently priced at 89.50. Let's take a look at the March contract for the U.S. dollar index. If price just tests that and rejects it, oh, that is muy bueno for the shiny metal out there. And if it closes above it, how do you say the opposite of muy bueno? Probably mucho grande problema. That is how I would be looking at it for the shorter term time frame. So pay attention to the U.S. dollar index, and certainly pay attention to those levels that we took a look at in Goldilocks out there. If we take a look at, are there any other questions out here? Is there anything else? Yes, there is. Warren Zevon. No, just kidding. I just like that, but, you know, in any event, you know where that comes from. Let's take a look at Warren C. Looking for gold to pull back, question mark. How far? Well, it looks like we covered that. That was for Warren in Denver. So glad to take a look. He said, could you do the Euro-Japanese yen and gold relationship? But the Euro-Japanese yen, not the U.S. dollar Japanese yen. And for you, I will do anything. Why? Because you took the time to write in. So how are we going to do that in an easy fashion out here? We're going to go take a look at Stevie's correlation. So we've got gold. All I have to do is change what that correlation is that we're looking at. So we're going to go put the Euro Japanese yen. I'm going to, now, I guess the way you've written this, I don't know what you actually meant. I think I do. Did you mean just the euro? Did you mean just the Japanese yen? Or did you mean the euro-yen currency pair? I'll try to figure it out. We get back from this break. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the chart we're looking at right now, this is for Warren C. in Denver. You want to take a look at the correlation between the Euro-Japanese yen currency pair, which is the center portion of our screen out there. I'm just showing it as a line chart, and gold, that's the top portion of the screen. Now, the bottom portion shows the correlation. Where the lines are below zero, and you can pretty easily see where the zero level is, says you have an inverse correlation, much like you would with regard to the U.S. dollar index out here. So the gold futures contract is pretty well inversely correlated to the Euro-Japanese yen currency pair. The question becomes, is really that much better? Now, by the way, this correlation that we're looking at is over a period of, where is that? This is a 5-day correlation. I can change that to a 10-day period of time. I can change it to anything I want. And so the average over a 2-week trading cycle is pretty good. But the question, wait, that's the U.S. dollar index. Wait a minute here. Hold your horses. Hold your horses out there. I just caught a little Stevie error. We're going to fix it right now. Now, here we can see the Euro-Japanese yen currency pair. That is what the currency pair is doing on the blue line. But now we have the correlation cooking with olive oil, as they say. Now, here's the 5 period, and you can see, to me, this is a coin toss when I take a look at that. If we put in the U.S. dollar index, though, there we go. So in this case here, I'm just going to put in the continuous contract. There you go. Look at, that's the beauty, right? That's why we have switched. That's why we have thrown out, first of all, we've thrown out just simply the yen. And we've just now, because what's so good, correlations are great, but you have to be able to recognize when they stop working, because they will always stop working at some point in time. It may be years, it may be days, I don't know. But you and I have tools to be able to identify when we can switch over to something else. That's why when I was answering Larry's question about gold and so forth, we went and said, we've got to pay attention to that completed A to B equals CD to the downside inside of the U.S. dollar index as we speak right now. The whole candle configuration could change by the end of the day, and then I have a different opinion out there. Look, the role for you and I is to not get too – the only thing we want to get hung up in is our technical analysis patterns out there. Those are the things that paint the way. Like Larry Pesavino said, trade what you see. Folks, if you were watching my chart out there, you saw an A to B equals CD to the downside inside the U.S. dollar index. You saw a seventh wave move to the downside. You saw Stevie's red line. Everything that you need is right there to help us determine what the next move is out there. It's just a game of really good probabilities. It's a great game. It is way better than going to Vegas because we can take our money off the table after we see the cards. Exactly. It does not. Now, if you can't count the cards, if you can't see the pattern, well, then you're at a disadvantage. If you don't know you're bullish engulfing from a bearish engulfing, then, yeah, that's a problem. If you think a doji is really a spinning top or a small-bodied candle, that is a problem out there. You want to know your P's and Q's if you are going to be a pattern recognition expert or master. And so that's what I'll be assisting subscribers with on Wednesday. But you already know that out there. So I would say, Warren, focus on the U.S. dollar index, not the euro, Japanese yen, when you go take a look at what is going on in the Goldilocksville out there. So hopefully that helps you. And Adi, yes, I did already cover for you the yin and the VNO out there. So just wait for the archive of today's show and rewind it and watch the archive, and you'll see what we all looked at with regard to those two that we that you had requested on Friday. We've got a question out here from Robbie M, or Robert M, I should say. Hey, Steve, on the Think or Swim platform, do they by chance maybe call Stevie's red line something else? It's not on there. It's something that has to be programmed. And so I've got the code to be able to help do that. So there is no red line on any software. There is no Stevie red line. There is no oscillator on change line on any piece of software that I know of that hasn't been programmed. Like I've got it on my Thinkorswim platform. Certainly, I don't use that I don't use it basically because I've got too much knowledge in other tools and systems. Inside of the NinjaTrader software and the e-signal. I don't need another application out here. This is just quite fine and dandy out there. So, but if you come to the workshop, I'll show you exactly what it's all about. You'll be all set and be all squared away. Okay, so we got the Dow off 85. We had a request to go take a look at the Treasury bond out here. I think that was from Danny. He wants to take a look at Danny. So, Danny, I am officially, just so you know, short the Treasury bonds out here. And as we take a look at them, but I'm short, but the sphincter muscle's getting a tad tight right now. And it is because you'll see, and I don't know how this works. I just know that for goodness sakes it does. Whew, it's amazing, isn't it? If you take a look at the last time, this is the March Treasury bond that we're taking a look at. The last time that it made a high out here was on September 8th. And when it did that, it was Stevie Wonder singing in the key of G. That was the high. Then price moves down into the trading session of October 27th. And what does it form down there? Another Stevie Wonder singing in the key of G. We then get to a stage where it just simply makes a retracement to get that A to B equals CD to the downside. And from that point was December 6th. You start counting the waves from there on down. And today we're in the seventh wave. We are in the letter G. I'm pounding it into the table. You kind of get my drift out here. Is the third time a charm, or is the third time just a simply all-out failure out there? I don't know. I have more downside target on a daily basis. On a weekly basis, shoot, a lot more downside target. But as we speak right now, the downside target is 146.59. I don't know whether it's going to hit it or not. I do know we're in wave number 7. It can extend itself. It can extend itself for many days out here. I just know that the hair on the back of your neck, should you have any, should start to stand up. These patterns, folks, they work over and over and over again. Do they work 100% of the time? No. You show me that pattern, and which you probably won't. If I had that pattern, I don't know if I'd show that pattern. Because, you know, we'd be trading from Air Force 2 I can tell you that much. But in any event, you know what? We don't need to have a pattern that works 100% of the time. The pattern that works 100% of the time is the ability, when the pattern fails, to take your chips off the table. It's really that simple. It doesn't get any better than that, but you've got to, or you want to, or you should go learn those patterns. So, Danny, here's my take on the 30-year Treasury. Can still go lower and target 146.59. If at any point in time it closes above 149 right now, even Steven out here, I can tell you I'm exiting my short position, and then we'll start taking a look at where could this thing bounce to, or was that a bottom? And the first place it could bounce to is the 0.382 retracement of that entire A to B equals CD, should it complete and form that leg. So, as my friend Gus from my big fat Greek wedding would say, there you go. And that was sprayed with a little Windex on it. Steve Rhodes with TFNN. Dow's off 84, S&P down 9. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So the spot volatility index still trading up 14.68% right now. That's above the 10% threshold line. That really is a clue as to what will happen in the futures market overnight should we close at about this level. So you're going to want to pay attention to that, see what the one-day rate of change is there. You know, it's interesting here because when I take a look at the indices, and I look at the New York Stock Exchange as an example, we can see that it's advanced decline oscillator. That's another tool, market breadth tool, that I'll be teaching subscribers some of the best uses for that on Wednesday evening. We can see that from a daily standpoint, it's down at minus 102.18. Let's say the market really finishes poorly going into the close today. It's conceivable that that could get down to a minus 150 level. What happens at minus 150? Boy, you're not going to believe what I'm going to say, but you have to believe me because you just have to. You're listening. That marks the oversold condition. Yeah, it could happen in one single day off of the highs, not really being much off of the highs out there. It's just the way that it works. We're not there yet. Does price have to get down there in order to turn? No, it does not. Why? And this is, you're going to want to watch the New York Stock Exchange. You can't trade it. I can't trade it. But, hey, we want to be paying attention. Why? Because it made a seventh wave move, so it appears, on Friday. Unless the highs get taken out today. So it's made a seventh wave move. But in doing that, whenever you take a look at something that's giving you a topping signal, a bottoming signal, maybe it's just a test of a swing point on light volume, you got to know where Stevie's red line is. You got to know. Because coming down and testing that means you've just moved down to a level of support. And if support holds, which in this case here for the New York Stock Exchange it did, it has thus far, 13,543 is the number, then all it's doing is setting up the next bottom. That's right, a bottom after a one-day decline. Folks, it is Magical Monday. And the guy with the most magic, David White, your favorite polar bear of mine, he's up next. Tom O'Brien from 3 to 5. I'll be back with you on Terrific Tuesday. Thanks for being here. Have a great day. We'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.